Are you ready for the VRQA Financial Management Guidelines? This short video shows how we can help you easily meet the guidelines and build good practice financial management into your regular reporting. As you may know, the VRQA requires you to do a school business plan with a 5-year financial forecast. The forecast inputs must include assumptions for school enrolments, state and Commonwealth funding. The forecast outputs must show a profit and loss, balance sheet and cash flow statement, as well as financial health check ratios. You will then need an independent qualified accountant to validate your plan. They will typically want you to see how your historical data and your assumptions come together so as to validate your forecast. Therefore, we think you will need what is called a 3-way historical and financial forecast model so as to meet the VRQA requirements. Our solution is a model tailored for schools that is timely, robust and scalable. Timely means it's easy and quick to implement and to update with the latest historical data and roll forward on a regular reporting basis. Robust means high integrity, so it can't easily be broken. It also means that the logic is reviewable by the independent accountant in a way that makes sense to them. Scalable means it can easily accommodate new GL or budget account rows or new time periods. So let's take a look. All our models are built in a single Excel workbook using an add-in software called Medano. It operates like a normal Excel workbook, but Medano adds features to make it more timely, robust and scalable. The table of contents shows the key presentation output pages you need for the VRQA and your regular reporting. The assumptions section is where you update your historical data and forecast assumptions. The appendices contains useful checks to ensure robustness. Let's take a look at the school's dashboard. The first thing to note is that it shows 2 years historical and up to 7 forecast years. The dashboard shows student enrolments by year and capacity, a summary profit and loss, a summary of teaching staff, a summary of discounts and bursaries, a summary of any commercial operations, a summary of CapEx investment, as well as financial health check ratios required by VRQA. A series of charts and ratios of the same as above. For example, enrolment via capacity, student-teacher ratios, fees and expenses per student or teacher. Also amongst the outputs are an annual 3-way profit and loss, balance sheet and cash flow, a monthly 3-way profit and loss, balance sheet and cash flow. And again, this is for 2 years historical and 7 years forecast. A current year budget summary, so you can track the variance between historical, reforecast and the original budget for the current year. Of course, any forecast output is only as good as the inputs. Let's see where they come from. The historical income statement and historical balance sheet data gets entered on these 2 tabs. We can import and map from your historical trial balance in Excel to the forecast budget lines. We can map and import from many TB accounts to one budget line if needed. We can add or delete as many rows as you want. You can manually key in data if you prefer. Notice how the historical data currently ends in December 20. With a few mouse clicks, we can roll that forward to January 21. And there's the new column added. There's no time-consuming copying and pasting columns or relinking of formulas. That's the power of our model scalability. On the Student tab, you enter the starting values of students by year, estimated growth and attrition rates and capacity. Importantly, we assume that student groups move up each year. For example, preps in December move up into year 1 in January the next year. This helps you make realistic and valid assumptions about your school enrolments. On the Revenue and Expense tab, you forecast revenue per student cohort based upon school fees. We also show state and Commonwealth funding based upon numbers of domestic and international students. Operating expenses are forecast based upon historical amounts and growth rates. On the Salaries tab, you can forecast your biggest cost, staff. We do this by school and by headcount and average base salary. We can also cater for deferred revenue and payment cycles of fees and government funding. And of course, we can budget for CapEx. That's just a quick overview of our standard schools model. The model is very powerful and easy to customise to your school. We'd be happy to give you a more detailed presentation and show you how we can help you meet your and exceed the VRQA's financial management requirements. Please contact Kylie Maher or Colin Prasad at Moore Australia Victorian office.